A new flavor for your ear. Epic Spotlight. Putting the spotlight on positive goings on the real people that have chosen a real path. The who's, the whys, and the hows are being shared and given to you.
And we're back, and we got another one. But before we get going, we got to take care of some housekeeping notes. Today's episode is sponsored by Epic Mortgage. Whether you're buying, refinancing, or investing, call Epic today. That's 708-905-5300. That's 708-905-5300. It's your dreams, your goals. Let's plan together. Now on with the show. Today we have John Boll, who has dedicated over a decade to transforming people's financial lives. With 13 years of experience, John has been instrumental in helping individuals improve their credit scores and unlock their financial potential. John started as a mortgage consultant, mastering the complexities of credit for 7 years. For the past 8 years, he has excelled as a FICO certified credit restoration specialist, earning a reputation as a trusted authority in the field. John's commitment goes beyond credit repair. He provides comprehensive, personalized solutions that foster lasting financial wellness and prosperity. His passion for empowering others has made a transformative impact on countless lives. Outside of his professional achievements, John is an avid traveler who enjoys exploring new cultures and destinations. He's also passionate about community service, volunteering his time to mentor young adults on financial literacy and career development. Welcome, John.
Thanks, Dante. I appreciate you having me today.
Hey, I appreciate you even coming on. Hey, let's get right into it. How do I get an 800 credit score?
Okay. It's not as hard as you think. It's just a few simple rules that you did not get taught in high school, which is like my biggest gripe about this country is there's no financial education. So I try and do my part to put as much knowledge out there as I can. But the key is there's 5 things that make up a credit score. And that's what you need to focus on as far as getting that 800 credit score. The bureaus like to see 2 to 3 installment payments. And by that, Dante, I mean car payment, house payment, assorted financial payment to the bank every 30 days. So that's 35% of the score. They want to see 2. 30% of your score is credit cards. They want to see 2 to 3 major credit cards, Master, Visa, Discover. They want to see 2 to 3 minor credit cards, which is Walmart, Target, Costco, store cards. And that's 30%. They want to have you have 2 of each. And then the other big factor is link the credit history, which is 15% of the score. Bureaus like to, and here's the thing, when you get, and it ties mostly to credit cards, but what the bureaus like to see is when you've had a card that's been open 5, 10, 15, 20 years, what that shows is you are managing your credit correctly by keeping those cards open. But what I've just talked about, those 3 things manage 80% of your score. So it's a big deal to have these things in place, along with fixing your negative items on the credit report.
But negative items aren't as important as people think, correct?
Yeah, they only, and I just found out this recently, and they only account for like 20% of the overall credit score. So, there's a bigger focus, and you'll see your scores go up higher once you get the right credit mix in place. So a couple of installments, few credit cards. I mean, that's the big thing. The one thing that your viewers need to know, the most damning, horrible thing you can do to your credit is have late payments. And believe it or not, a 30-day late payment, let's say you were at a 780 credit score and you had the perfect credit mix, no late payments, no collections, nothing. And you miss a credit card payment or you miss a car payment. It will literally, and I'm not kidding you, drop your score 100 to 110 points overnight, affect it negatively for 2 years, worse for the first 6 months. I mean, it's brutal. And the other thing that the biggest factor as far as credit cards is limit versus balance. Bureaus want to see limits or balances below 20, 10% is better of the limit. When I tell my clients, don't go over 20 and pay everything off every month. And what should go through your head is, if I cannot pay this off in 30 or no more than 60 days, I will not use my credit card, because a lot of the folks I talk to, they get their credit cards maxed out. And I mean, it's brutal as far as the hit on your points. Just to give you a quick example, with the bureaus, the way it works is this: when you go over 20 to 30%, they start taking away points. You get to 50%, they take away more points. You get to 75%, they consider you maxed out. And what makes it rough is a maxed out card can cost you anywhere from 15 all the way up to 40 points per card. The lower your score, the harder they slap you. I mean, I've had clients that were in the mid fives that I told them, hey, to build your credit, you got to get a secure credit card. They get that sucker, max it out, score drops 40 points. But the one thing is, on the flip side, as soon as you get those balances paid down, your score goes up. And that's the closest you're going to get to instant gratification when it comes to credit.
Yeah, definitely. And, one thing I wanted to touch on too is, obviously I had a client yesterday that was referred to me, and she comes in the door already having an expectation of where her credit should be, based on a credit score. And, consequently, when I pulled her credit, it was drastically different. And so there are different types of credit, right? Or how does that work?
Yeah, there's different credit. You have basically FICO, and then the new one is Vanish. And those are the credit scoring models that they use. The three major bureaus use pretty much FICO. Like, as far as if you go to get a mortgage, most places are going to look at a FICO score. Vantage is like the new kid on the block. I know a lot of people look at Credit Karma. As a matter of fact, I have all my clients sign up for Credit Karma. It's only two bureaus. The scoring is off. They use Vantage scoring versus FICO. So you're going to see a bit of a difference, anywhere from 20 to 30, even 50 points sometimes, depending on different circumstances. But that could be the difference between a FICO score and a Vantage score. But yeah, they don't make it easy.
No, they don't.
Credit Karma too. The one thing about Credit Karma, and all your clients should be signed up for it, and here's why. Ignore the scoring. Credit Karma does a great job of updating the accounts that you have. And when I look at a Credit Karma account, I'm looking for what's on there. I'm ignoring the score pretty much. But they do a great job of updating, and it's free. It's only two bureaus, but hey, you can't beat the price.
Yeah, no doubt. And then obviously, you may have a different score with a car, if you were running your credit for a car versus a mortgage, right? There's different criteria. Right. Can you go into that? Different
algorithms per industry. So if you get to buy a vehicle, which is kind of a scam, because they make, they are the lowest in scoring when it comes to their algorithm and their model, then they make the most money on interest rates. So unfortunately, you go to get a car, your Credit Karma score might say 600. You go to get a car, it's saying like 550. So they use a different algorithm for that. Same with mortgages, same with consumer credit. And then if you go to get insurance, different algorithm. You go to rent an apartment, different algorithm. I mean, it's a convoluted mess, but it's the cards we deal with. So it's just a matter of, awareness.
Understood. And then as far as just what are some of the misconceptions of like credit repair? I mean, we hear that term, like what would differentiate you versus someone else?
The thing that sets me apart from anybody else is credit repair is an overall vision of fixing the credit. It's making sure that we have the right credit mix, and then also handling the debt. And then the stuff that's on the report, you just gotta. So let me back up here a second. So many of the folks that do what I do, they focus only on the negative stuff. That's only part of the puzzle. It's about having the right credit mix, having the right number of credit cards, having the right installment payments set up. And then the other thing that I do personally and I help folks with is to settle debt for less. And that's a biggie, because not everything comes off on the credit report. If you might make a couple of disputes, but if they verify it's yours and it's open debt, it's going to have to be dealt with. And the thing that people don't realize is the debt that's on the credit report, if it's 2 years or less in age, you can settle that all day long for 50% of what the debt is. If it's 2 years or older, you can settle that between 20 and 30% of the original debt. And the biggest key, there's like a secret in the industry, is if you're going to settle debt and it's with a collection company, always call to settle it at the end of the month. So I'm talking like 29th, 30th, 31st. Reason being, all these collection companies, they hire people on commission. And you start to work at a collection company, they give you a big old book and it's dial for dollars. It's just a portfolio of debt. And they just go through, they'll call you. And if you talk to them at the beginning of the month or middle of the month, they don't have any incentive to give you anything off. And that's what I've seen with a lot of clients. But if you wait till the end of the month, if they haven't met their quota or if they're trying to pay out their paycheck, you can get them low. I had one of my clients settle a $13,000 repo on February 28th, last day of the month, for $3,000.
Wow.
So you can get them low. And the other key is the higher the dollar amount, usually the lower you can go to. So, I mean, I always tell folks, always start out at 30%, no matter what, because you can't go back down. It's always best to start low and then see what they counter back at. And then, hey, try to meet them in the middle somewhere.
Got it. Now, obviously, besides improving people's individual credit, you also work on business credit as well.
Yeah, I help people establish business credit and get funding. Business credit is like a totally different animal. With FICO, there's 5 things that make up the credit score. With business credit, there's only one thing, and that is how you pay. And that's what they go after. And their scoring is called the PAYDEX score. And basically, it's 1 through 100. And you want to be in that, you want to be above 70%, making sure that you're making payments. But ideally, with business credit, you get a bill, you pay it right away, and that's going to help build that score up. And anybody that's wanting to get business credit established, they need to start out with getting some business credit cards. Like go to Walmart, they can go to Home Depot, Office Max, and once they have the LLC set up, go in there and get a business credit card set up.
So create a business, create an LLC, and then they can go in right away. It doesn't matter, like they don't need a certain amount of income to show for it.
Well, I mean, they're going to look at how long you've been in business, and they're going to look at a few factors like that. The big thing, though, that they're doing now that they weren't doing 5 years ago is everybody checks the personal credit. So on a personal credit standpoint, if you're trying to establish business credit and as far as credit cards or get funding, if you want to get a decent rate, you got to be at least 680, 700, or else you're going to get raked over the coals when it comes to interest rates and programs. I mean, you can get it done. You're paying out the nose for it.
Gotcha. And what are some of the latest trends as far as credit goes? I mean, like you said, that's a change where they're looking at kind of like the guarantor of the deal. What are some latest trends?
Well, one of the other big changes now that that's going on is they don't report medical collections that are under $1,000. So you're not seeing, moving forward, if you had old collections on there that are lower, yeah, they're going to stay. But moving forward, anything under $1,000 shouldn't show up on there. And the other key is they will not report medical collections for 12 months onto your credit report. So, you want to get that taken care of. But, if you're doing FHA loans, which a lot of the folks I work with that are referred to me are trying to get, they will ignore medical collections and then they'll ignore charge-offs. That's correct, right, Dante?
Yeah, charge-offs, yes, 100%. They don't look at those.
But here, I have a question for you.
Sure.
So let's say they have like 5 or 6 charge-offs. Mm-hmm. Now they'll ignore all of those and just take a percentage of that income or that amount and then apply that to the DTI.
So from a charge-off perspective, they're supposed to not count anything on charge-offs. If it's in collection, though, then it exceeds over $2,000, that's when they hit you with 5% of the total balance.
Gotcha. Gotcha.
So it's the collections. And then obviously from sometimes you have these credit repair people that just do a lot of disputes. Like I said, they focus on the negatives. And so we can only have up to $1,000 of disputes on a credit report, or we're going to have to remove the disputes, which obviously, will also affect us as well.
Sometimes affect the score. Yeah, for anybody out there, if I have got the numbers for all the credit bureaus, I can I'd be more than happy to email them to you, but you can get disputes removed from the credit report within 24 to 48 hours.
Oh, wow.
You just call the number, give them your info. They'll take the disputes off the account.
Awesome. Yeah, sometimes we'll have them sign an authorization form, and then we have dispute letters, and we'll send it in through some of the bureaus as well. Now, as far as just, overall improving my credit, what are kind of just some basic steps that you would say, here, these are some basic things that you should do always to maintain good credit? Okay.
The two biggest things I can give you, because it affects the two biggest factors that make up the credit score, is number one, never have a late payment. If I personally, I have everything that I pay set up on auto pay. That way, the only thing I got to remember is on the 15th, I got to have X amount of dollars in the account for the month, and I'm good. That's the one thing, is you got to avoid them lates at all costs. The other thing is with credit cards, try and keep everything below 20%. And there's some people like they get into this big thing like, oh, if you keep a little bit on a credit card, you get more points, but then you're taking a factor of, missing a payment. I just tell everybody, just pay everything off. There's not that big of a difference. And you'll be in better shape. And just use your credit cards for building credit or emergencies.
Got it.
Because the interest rates now are just phenomenal. There's the trend now. There's so many people that are defaulting on credit. I mean, it's an all-time high as far as credit card defaults. I think it's like 1 out of 5 right now. The credit cards are in trouble. And the other thing too with repos are just like off the hook. They're like doubled what they were. So they can say what they want about the economy, but I deal with people all the time. Same with you. There's a lot of folks hurting out there going paycheck to paycheck.
Yeah, I mean, what we've ended up seeing is obviously a lot more people doing lines of credit now.
Right.
We're setting up, and the lines of credit, based on the equity, it's 130,000, 80,000, it's big lines of credit. And it's really just debt consolidation is what we're doing, or getting some cash out. So no, I definitely agree with you on that. But no, where can they find you, John? Can you give your contact info?
Oh yeah, absolutely. My web address is creditcareco.com. So www.creditcareco.com. If you want to visit there, I got a bunch of ebooks. I'm huge on education. I have like 5 ebooks that people can download. On the front page, there's a really good one that I have that's called the Financial Wellness Guide. It's like 50 pages, but it tells you, how to talk to your kids about credit, budgeting, just a ton of really, really good info. So
awesome.
But I do free consultations, free credit report reviews. So if anybody wants to ever give me a call, feel free.
And then obviously with credit repair, there's no really regulation per se. You can work with anyone across the country.
Yeah, all 50 states.
Awesome.
Not a problem.
Oh, well, hey, thank you so much, John, for being on the show. I appreciate you. Great information today.
Thanks, Dante. Appreciate you having me. Have a great day.
Yeah, have an epic day.
All right, thanks. Bye-bye.
Are being shared and given to you.